Welcome back, people, to another trade recap, and in today's video I'm going to be going over how I am up $1,500 on the day, aka I've half passed a fresh evaluation. In this video I'm also going to be going over just my whole perspective on the charts, the exact two concepts I used today to understand where price was going to go, to get in to where price was going to go, and everything in between. So just before I start off the video, I'm going to be saying the least thing I have been recently is consistent. I've been blowing express accounts. I've been throwing money in the bin. I've been blowing dozens of evaluations. Dozens. I've not been posting on YouTube. I've not been posting on TikTok. I have been a complete degenerate and fucking up my life daily. And I'm not here to make any promises to the camera. But I would love to say, from this day going forward, I'm going to be consistent. I'm going to be pumping out content. I'm going to be pumping out education on my Discord for other people to learn from. So with a breathe of air and the first TikTok and, the first bit of content in the past week or so, let me just get straight into how I capitalized on today. So, starting off the clip, as you can see, the executions today were not sexy. If you might also realize, today I did not trade New York. New York opened up here, right here. It's been like 2 hours since markets opened. I traded London. Do I ever trade London? No, I don't. But I saw what I wanted to see on the charts and I executed on that. So, turning off the executions. My daily bias going into the day was bearish. It was bearish for many reasons, but the main two are going to be these. First of all, what red news folders are getting released this week? We understand that there's no news yesterday or Monday, there's no news today, Tuesday, there's FOMC tomorrow, so that is all that we need to understand. Tomorrow, FOMC is having a meeting. That means that pre to FOMC, aka Monday and Tuesday, or Tuesday especially today, price is very likely to generate liquidity in one singular direction. That means that, in other words, or another way you can say it, price has a very high likelihood of continuing in one direction. Let me just look out the window. So, to start things off, what can we see from the charts today? If we turn on the sessions, highs and lows, that is the best way of us seeing what's happened. Asia opened up. We were bearish. London opened up. We were bearish. New York opened up, manipulated higher, bearish. How on earth did I understand that we were going to be bearish today? It is because price has a very high likelihood of continuing in one direction, i.e. once New York has opened up and we've been bearish for the whole day, we have got a very probable cause to continue being bearish for the rest of the day. If we then also head over to the daily chart, we can see a daily for value gap, but behind the daily for value gap there stands an absolutely fucking humongous daily candle. So to go over it again, the two concepts I used for today was the fact that FOMC has a very high likelihood of continuing in one direction, pre-FOMC, the day before FOMC gets released, and the second one is an ADR, the average daily range. As we can see on the daily chart, there is a bullish daily for value gap. That is not my concern. My concern is that there is a humongous bullish candle on the chart. If we have been bullish for the past 3 weeks and we're due to have a bearish rebalance, what do we want to see? Why do markets move? Markets move to hunt orders. Markets move to take people's money or stop them out or just take their liquidity. If we can see a massive candle like this, What produces a massive bullish candle? People buying the chart. So for us to have a rebalance and for price to gain neutrality, if that's a word, if markets want to come back to a neutral standpoint where they can then figure out where they want to go, price has to stop people out. Price has to take people's liquidity. So what are we going to do with our fib? We are going to draw out our fib from where the start of the massive daily candle was to the end of the daily candle. And what can we see here? We can see a massive range, and look, all that really matters here is equilibrium and OT of the range. You can forget about the low of the day, because even though it doesn't have a wick on it, which is a very strong draw on liquidity, that's not the point. So opening up the day, FOMC is tomorrow. We're likely to continue in one direction. There's a massive ADR with a bunch of people buying the market here. Price has a very high likelihood of retracing into this daily fair value gap and stopping them out. As soon as markets open, we've been bearish the whole day. So why on earth wouldn't we be bearish for the rest of the day? Exactly. I traded London. Personally, confluences for that was just, we can see that the daily fair value gap has not been opened into. Price was bearish the whole of Asia session. We can't expect it to reach up to Asia high. Price has been bearish for the whole of London session. We cannot expect it to reach back up. But internally, this is just a quick recap of how I made my bread on the day. We're up $1,504. I took a few trades. We bought here just because this whole chart leg got disintegrated. Price ran through all of this bearish leg. What can we expect price to do then? We can expect it to rebalance higher, because what do markets need to move lower? They need liquidity. We need to stop out people who have sold in this area to continue to sell off in that area. So what do? We enter the chart like here I think. We get stopped out to the tick. We then re-enter here. We take partials off at this high. We then get trailed out here. I then continue my bearish bias because ES ended up taking out this high. So we've now got our manipulation in play. People have been buying the chart here because they think price is going to continue after it has destroyed this whole bearish leg. No, it's not going to. We're bearish on the day. We've got a daily fair value gap resting below. So what do? I look for bearish sells here. I don't get in. I look for bearish sells here. I don't get in. I look for bearish sells here. I get stopped out to the tick practically. I think it was something like that. I got stopped out to the tick. We then look for sells again down here. We fumble that. We get sells again here. Get stopped out to the tick exactly on that candle. Entering sells again here. And we ride price down to the daily fair value gap. And yeah, that was my day complete. Just a little recap of how you could have capitalized on New York session. As we've already gone through, price was bearish. The whole of Asia, the whole of London, we can expect price to manipulate higher in New York to bait people into thinking markets are going to go higher, and then we just sell off. How could you have done that today? If you were looking for sells off of here after markets just shat the bed, you would likely get stopped out because price hasn't really manipulated high yet. Today, off of market open, we were expecting price to manipulate higher before we went lower. What did that look like? Price ran a 929 high. That can be seen as a form of manipulation, but at the same time, that's not good enough really, because people haven't been properly bought. People haven't been properly sold or properly just scammed into buying the market. Price ran higher again. Price then ran lower. You could have easily sold the market like here or here, stop loss at the recent high, because you can expect price to continue in one direction. At any point in this range, if you were trying to buy towards this LR here, you were completely wrong, because today, I'm going to remind you guys, FOMC is tomorrow. You can expect today to run in one direction. You can expect today to generate a whole lot of liquidity for tomorrow to take. So that's going to be this the end of this trade recap. Hopefully you guys have learned something. If you have, drop a comment down below. I'd love to hear it. I'd love to hear if my ways of teaching can be made better in any way possible. So thank you guys for watching this video, and I will see you again tomorrow, probably.